In this video, traders, we're going to ask the question, when should you stop trading for the day? Stay tuned. Hey guys, welcome to Alright, so when should you stop trading for the day? There are some times when certain things happen in the trading day, market conditions, string of trades, different types of things, and some people want to stop trading for the day, some people should keep going trading, some people want to keep on trading for the day. So let's look at some of the main things that might happen to a day trader and work out between us whether that means you should stop trading for the day, because I think there's a few things out there that might be not in your best interest. So let's have a look. So the first one is, should you stop trading for the day after a big winner? So the argument for that is that you might feel like you're a trading god, you might feel like you can't do no wrong, you might ease into overconfidence. But the argument against that is that if you've got a big winner, then maybe market conditions are really good. Maybe they're perfect for your strategy, your style, and you want to be trading. So that to me is a no. As long as you don't creep into overconfidence and you maybe still allocate the same risk parameters, your same risk per trade, you don't suddenly treble it because you've had a big winner, then there's no reason not to keep trading. You've had a great big winner for the day in the morning, it's been a fantastic trade, then carry on that thread. You're obviously in tune, or you might well be in tune with the markets, the conditions are right. Milk those conditions for as much as you can. The danger is people have one big winner and they go, oh, I had a big winner, and they walk away from the day. Now, of course, if you're prone to overconfidence, if you're prone to thinking you can't do any wrong and all that kind of stuff, then by all means walk away, because you know you've got a negative expectancy following on from experience. Then maybe there's something to work on. But for most people, as long as you're risking a small amount and you haven't changed your risk parameters and you know you're not going to, then just carry on trading. That's my opinion on that. Okay, what about after a big loser? Slightly different with this. Now, if you've had a big loser, then you're probably going to be stopped out intraday anyway, i.e. you've got a loss parameters for the day, I don't want to risk more than X, that's probably hit that, and that means you should probably stop for the day. So we're going to give it a tick for that one. But the other thing that I want to add is that most of the time that big loser may mean that you're not in tune with the market, it might activate revenge trading. I think it's perfectly acceptable after a big loser to step out from the market because you might want to try and get it back. There's lots of different things. And now, if you are still within your parameters of your loss thing for the day, then no, by all means carry on trading. So I say big, that it probably has wiped out your intraday loss, but if you're still there and you've still got some left, so to speak, you got one small trade, then by all means trade it, because you shouldn't deviate from the plan. And if that turns out to be a loser, then of course cut it. So after a big loser, yes, if it's big enough to have you hit your intraday stop level, consider it maybe or maybe not. If it's significant and it's bad and it just completely misread the market, then maybe it's time to come back and look fight another day, should I say. Number 3, if conditions are bad. So should you stop trading for the day if conditions don't feel right? So if it's quiet, if it's choppy, is that a reason to stop trading, or should you just adjust strategy? For me, that's a reason to get out of the market. If conditions are no good and you can't find a market to trade, if you're trading multiple markets, or the market that you do trade is not conducive to your style or strategy, then don't try to force things. That's when damage can be done. I feel that people try to extract profits, say, well, I should be able to extract profits from this even though it's quiet, and you end up getting caught out. You end up doing yourself no favors. Number 4, if the market is volatile, should you quit for the day? No, you shouldn't. That's the best possible conditions, guys. Stay in the deal. Now, dial down your size by all means to adjust for the ATR of the day, the volatility of the day, but it's no different trading the volatility when the volatility is high, when it's low. Just means that the ranges are bigger, so your position size is going to be smaller. Instead of having a 15 tick stop, for example, you might have 30, so reduce your position size by half. But volatility, regardless of that, generally means more opportunity. You get many more opportunities per day in a volatile market than you do a quiet market. So putting the ranges to one side in terms of position sizing, the fact that the frequency of opportunity increases means it's definitely not a day to stand aside. Even if you don't fancy it, guys, you want to go on a demo, it's something to learn from, because it's super opportunity in volatile markets. Number 5, if you feel ill. Should you stop for the day if you feel ill? Pretty obvious one, guys, isn't it? Yeah. Get out of the market, if you don't feel in the right frame of mind, you've got to be as peak performance as you can. Listen, we're not going to feel 100% every day. You might feel a little bit tired, a little bit this, a little bit that. That can be shaken off quite easily. You know, if you press ups, a couple of cups of coffee, bang, you know, working out what you're going to do, get into the groove of it, you can shake that off. But if you're feeling ill, you got flu or you got something, then don't trade, guys. You know, there's no point, because it's a very high performance game and you just putting the odds against you. Number 6, after a string of good trades, should you stop trading? No. If you can measure the overconfidence, if you can rein it in, you understand what you got to look for. This is the key to that. It's knowing what signifies overconfidence for you, watching for it, and then having that as a warning sign when you go in. But if you're in a string of good trades, guys, stay on the thread. Keep pushing, keep pushing, keep pushing. Keep your risk parameters what they were, keep your setups, keep your strategies, but do more of what you were doing, because that's going to improve your results. And you might find that string of winners turns out from a couple of days to a couple of quarters. You know, and then it becomes really significant. As long as you're measuring that overconfidence and you're aware that potentially is a chink in your armor, so be aware of that. If you are aware of that, then keep pressing. Do not stop when you've got a series of good trades, man. A lot of traders do that. They stop, made some good trades. They kind of think, oh, I don't want to risk the gains. But you're going to risk them at some point, right? You're going to go back into the market and risk them at some point, whether it's the end of the day, during the day of the next trade, or the next day, or the next week, or the next month. You're not going to stop trading forever. So at some point you're risking those gains. So why not risk them when you've got some measurement that says, hey, you might be in tune with the market here. You're doing all right. Keep pressing. Number 7, after a string of bad trades, and this is slightly different. If you've got a string of bad trades, then it might be time to step out and reassess. It might be time to go, you know what? That's quite a lot of bad trades in a row. Maybe you've hit a certain risk level. There's no point digging a hole when you're out of tune, you know, trying to surf a wave that is just, you're hitting it, you keep missing it. Then maybe you need to adjust how you're timing. Because sometimes, guys, it just, you know, a little bit out of sync with the ebbs and flows of the market just means you're a losing trader just consistently for that period. But sometimes slight adjustment means it puts you in track and in tune, and you're back in sync with the winners. And so stepping out of the market, you know, stop trading during that trading day if you had a string of bad trades, allows you to readjust, reassess, readapt. So rather than actually being in the cold face of trading, you're out and you're looking, you're analyzing, you're saying, okay, what went wrong? Analyze what happened. Okay, maybe I need to shift away my entry as my stop, etc. And then go back in with a bit of a new plan, a new attitude, and a clear head. All right, guys, when should you stop trading for the day? Those are 7 for you. Let me know your thoughts in the comment section below. Do you agree? Do you disagree? My opinion is there. Take care. Bye-bye.